Hi everyone, welcome to our BitMEX margin trading tutorial. I'm Eric from Crypto Potato. It is important to note that margin trading is considered very risky, so you should trade only with caution. Always trade amounts you afford to completely lose. The biggest advantage of margin trading is that we can actually leverage a position without the need to hold the required bitcoins or crypto assets. In the crypto world, it is not recommended to hold a large amount of bitcoins on an exchange. Better to hold them only on cold storage. Another advantage is that the exchanges allows us to make short trades. It means profit when bitcoin goes down. That way we can hedge. So let's start. As you can see on the right side, this is the last transactions made. In the middle we have the bitcoin graph, and this is actually the last bitcoin price. The left pane is the most interesting one. Here we open our position. The quantity is the position size in US dollars. The limit price is the price we set in order to open our position. Buy and sell I will talk in a minute. The cost is the total price of the position. The order value is the total value of the position. It means if the leverage is set to 1, means there is no leverage, then it's equal to the cost minus the fees. This is now what is happening now. You see 24 milli bitcoins on each of them. Available balance is the balance we have in Bitcoin. Before opening the position, we will define the leverage. If this is your first trade, I would recommend leaving it on 1, that is, with no leverage at all. We will open a sample position now. We will set the quantity to be $100. So we will update the price according to the market. So we see now the price is around $4,050. So in case we want to open the position immediately, so we'll set the price to be a little bit higher than the actual price. So we'll set it here, you see, to 4,060. Now we'll make it a little bit interesting. We will define the leverage to be times 5. Then we will expect the cost of the position to be reduced by the same ratio. So let's see that. See now that the cost of our position is 24 milli bitcoins. So now I'm moving the leverage to times 5. Then you see that the cost is only 4.9 milli bitcoins. And again, now the cost is 24. Now we do it again. We see that the cost is reduced by the same ratio. This is basically allows us to trade on bitcoins we borrow from the exchange. Keep in mind, the higher the leverage will be, the more we will have to borrow from BitMEX, and therefore the fees will increase. Another thing you need to know about is the liquidation price. This is the price value at which BitMEX will close the position or liquidate it. BitMEX can't afford to lose, and in order not to lose the money we borrowed for the position will automatically close once we lose the amount of bitcoins that belongs to us. So let's open the position. We do it using buy, means long position, when we believe that the value of Bitcoin will increase, or sell, short position, when we actually benefit from the decrease in the Bitcoin's value. We believe in Bitcoin, so we will go for a long position. We will set the buying price to be higher than the market price. Like I mentioned before, I saw that the price is going up now. So let's make the price like 4,070. Okay, that's it. Okay, we will now open the position. You see the screen. In this screen, we need to confirm the position. Notice we can see when BitMEX is estimated to liquidate the position. So if Bitcoin drops around 3,400, something like this, then we will completely lose our $100, and BitMEX will close the position. So let's buy and confirm the position. Now we see our position. We have here the entry price. You see our entry price, unrealized P&L. So this is the loss or the estimated profit, and it's calculated according to this mark price. It will be calculated later. We also see the real liquidation price. It's here. It's like the estimated one, little bit less. In case we close part of the position, then we will see the gain or the loss in the realized P&L here. When the time comes, we have two ways to close the position. The first is by setting a sell command. Suppose we want the position to close at, let's say, 4,200, something like this. Then we will set the same command, but the inverse command. So let's do it. $100, 4,200. We'll set the sell command. We'll approve it. And then we will have it here in the active orders. As long as Bitcoin stays and doesn't touch 4,200, then we will have this active order. The second option, if we want to close the position immediately, there is this red button which says market on it. The order will be released to the market and it will close the position at the best available price. In our case, this is what I'm gonna do because I want to sleep tight. So let's close now the position. Okay, that's it. We can see it then in the order history and see if the total profit minus the fees. On BitMEX, there are more advantage options such as stop limit. We can see it here, but this is for the next videos. Hope you enjoyed and the video was clear. Now all you need to do is open a new BitMEX account. The link here below gives you a 10% discount on transaction fees for the first 6 months. Thanks a lot and see you in the next videos.